Stop trying to beat the market and start letting the market work for you. Most people think becoming a millionaire requires 16-hour workdays, high-stakes stock picking, or incredible luck. The truth is much more boring, and that is why it works. The lazy way is built on the principle of automation and the mathematical certainty of compound interest. If you invest $500 every month into a total market index fund with an average 10% annual return, you will have over $1 million in 30 years. You do not need to read financial news every morning or watch candles flicker on a trading screen. In fact, the more you touch your portfolio, the more likely you are to ruin it. Wall Street makes money when you trade, but you make money when you wait. This strategy is about removing the human element, your own emotions, from the equation. When the market drops by 20%, the active investor panics and sells, locking in their losses. The lazy millionaire does not even check their account because they have set up automatic transfers. They are buying more shares when prices are low without even realizing it. We call this dollar cost averaging. By the time you finish this video, you will understand that wealth is not a reward for hard labor. It is a reward for patience. You do not need a high IQ or finance degree. You just need a system that runs while you sleep. The goal is to move from working for money to having your money work for you. And it starts with a single decision to simplify everything. The secret to being a lazy millionaire is understanding that small, consistent actions create massive results over time. You do not need to save 50% of your income overnight. Instead, use the 1% rule. Start by investing just 1% of your monthly income. Next month, move it to 2%. Keep going until you reach a point where you are comfortably investing 15 to 20% of every dollar you earn. This gradual shift prevents lifestyle shock, which is the main reason most budgets fail. If you try to cut your spending too drastically, you will eventually quit and go on a spending spree. The 1% rule works because it builds a financial muscle. You are training your brain to live on slightly less than you make. Think about it this way: if you earn $4,000 a month, 1% is only $40. You will not even feel that money leaving your account. But that $40 is the seed for your future forest. As your salary increases over your career, you keep the same percentage. This means your investments grow automatically as you become more successful. While your friends are using their raises to buy more expensive cars and bigger houses, you are funneling that extra cash into your freedom fund. The lazy millionaire understands that it is much easier to grow a tree from a small seed over 40 years than to try to plant a full-grown oak tree when you are 60. Start small, stay consistent, and let time do the heavy lifting for you. The biggest enemy of your wealth is the person looking back at you in the mirror. Humans are biologically wired to be bad investors. We feel the pain of a loss twice as much as the joy of a gain, which leads us to sell when things look scary. To be a lazy millionaire, you must remove willpower from the equation entirely. You do this through total automation. Set up a recurring transfer from your bank account to your brokerage account the day after you get paid. This is called paying yourself first. If the money never hits your checking account, you will not miss it and you will not spend it on things you do not need. Automation turns your wealth building into a utility bill. You pay your electric bill and your water bill every month without thinking about it. Your future self should be your most important bill. When your investing is automated, you stop caring about whether the market is up or down today. In fact, for a lazy millionaire in the accumulation phase, a market crash is actually a sale. You are getting more shares for the same amount of money. By removing the need to make a conscious choice every month, you eliminate the decision fatigue that leads to poor financial choices. You become an observer rather than a participant in the market volatility. This is the ultimate set it and forget it lifestyle. You set the machine in motion once, and it runs for decades until you wake up one day with 7 figures in the bank. If you want to be a lazy millionaire, you have to stop trying to find the next Apple or the next Bitcoin. Trying to pick individual stocks is a full-time job with a high failure rate. Even professional hedge fund managers struggle to beat the S&P 500 index over long periods. An index fund is a basket of hundreds or thousands of companies. When you buy one share of a total market index fund, you own a tiny piece of the entire economy. If one company goes bankrupt, it does not matter, because the other 499 companies are still working hard to make you money. This is the ultimate lazy tool because the diversification is done for you. Index funds also have the lowest fees in the industry. Many active mutual funds charge you 1 or 2% in management fees. That might sound small, but over 30 years, those FEs can eat up nearly 30% of your final balance. A lazy millionaire uses low-cost Vanguard or Fidelity index funds with FEs as low as 0.03%. You are essentially getting the performance of the world's greatest companies for almost free. You do not need to research balance sheets, listen to earnings calls, or follow CEO drama. You just own the market. As long as the global economy continues to grow and innovate over the next few decades, your wealth will grow with it. It is the most reliable, lowest-stress way to build a fortune in history. You are not betting on a horse. You are betting on the track. To stay on the path of the lazy millionaire, you only need to avoid 3 major traps that reset your progress to zero. The first is high-interest consumer debt. Paying 20% interest on a credit card while trying to earn 10% in the stock market is a losing battle. You must clear your high-interest debt before the lazy machine can truly start working. The second wealth killer is lifestyle creep. This happens when your spending increases exactly at the same rate as your income. If you make $100,000 but spend $100,000, you are just a high-income poor person. The lazy millionaire keeps their big expenses, housing and transportation, low, so the gap between income and spending can be invested. The third and most dangerous wealth killer is complexity. Wall Street wants you to think investing is complicated, so you will pay them to do it for you. They will try to sell you whole life insurance, complicated annuities, or actively managed portfolios. Ignore them. The more complex a financial product is, the more FEs are hidden inside it. The lazy way is intentionally simple because simplicity is sustainable. If you cannot explain your investment strategy to a 10-year-old, it is probably too complicated. Stick to your automated index funds. Keep your debt at zero, and stay in your current home even when you can afford a bigger one. By avoiding these 3 traps, you ensure that the momentum of your compound interest is never interrupted. The final piece of the lazy millionaire puzzle is knowing when you have won the game. You do not need to work forever. The goal of the lazy method is to reach financial independence, which is the point where your investments generate enough income to cover all your living expenses. We calculate this using the 4% rule. This rule states that you can safely withdraw 4% of your total portfolio every year, adjusted for inflation, and your money will likely last for 30 years or more. To find your freedom number, simply multiply your annual expenses by 25. If you spend $40,000 a year, you need $1 million. If you spend $80,000, you need $2 million. Once you hit that number, work becomes optional. You can still work if you enjoy it, but you no longer need the paycheck. This is the ultimate payoff for years of being lazy and consistent. You have built a money machine that produces a salary without requiring your presence. While others are stressed about retirement and social security, you are living off the dividends and growth of the global economy. The journey might take 20 or 30 years, but the time will pass anyway. You can either spend that time working for money, or you can spend it letting your money work for you. Start your automation today, pick your index funds, and commit to the lazy way. Your future self will thank you for doing so little today to gain so much tomorrow. Subscribe to Ben on Money, and let's build that wealth together.